Good morning. Welcome to Chaikin PowerFeed, your daily market digest. Today is Friday, July 13th, 2018. Happy Friday the 13th to you superstitious investors out there. I am Dan Russo, Chief Market Strategist at Chaikin Analytics. You can check me out on Twitter at Dan_Russo_CMT. PowerFeed TV brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. So U.S. equities were higher on Thursdays, snapping a four-day streak of gains after snapping a four-day streak of gains on Wednesday. Technology and industrials were the best performers. Consumer staples and utilities were the laggards, as decidedly risk-on tone to the market yesterday. Treasuries were weaker across the curve. The dollar was higher against the yen, but little changed against the euro. Gold up about 20 basis points. WTI settled down 10 basis points following Wednesday's 5% slide. Breadth on the New York Stock Exchange was positive 1.6 to 1. Breadth on the NASDAQ was positive 1.5 to 1. And as we get to the desk this morning, futures are little changed. Asian markets were mostly higher overnight. Japan was a standout, up nearly 2%. European equities are higher, and treasuries are firmer across the curve, and the dollar seeing good gains against the euro and the sterling, and still a little bit better against the yen. Gold off 40 bips. Crude oil off a like amount. Banks kick off earnings season this morning. We'll hear from Citi, JP Morgan, PNC, and Wells Fargo. Widely anticipated earnings releases today. So here's the structure for the S&P 500. Trading into resistance at 2,800. Support is at 2,741, then 2,710, then in the kind of 2,677 to 2,680 area of the 200-day moving average. Resistance, 2,800. And then 2840 above that. RSI moving higher after testing the lower bound of bullish ranges, but still not seeing the one thing that I'm looking for in the RSI, which is actually to get overbought on one of these moves higher. We pull back, test 2,700 on the downside, hold it, and have this strong move higher in price. I want to see this. I want to see this indicator tick over 70. That would give me an indication that there's strength behind that move higher, and it's, that there's some momentum behind it. It's encouraging that we haven't become oversold in a while, but I want an overbought reading. We haven't become overbought in a while either. Chaikin money flow, flat but improving, kind of coming off those levels that we highlighted last week. Your market in a minute. S&P 500 testing resistance at 2,800. Banks kick off earnings season. We're going to take a look at the KBE ETF today. FANG stocks break to a new high. This is I put together an index of Facebook, Amazon, Apple, Netflix, and Google. The market generals breaking to a new high. Semiconductors, as you know, one of the key groups that I keep an eye on, nearing key relative support. And futures do point to a flat open this morning, as I said. Looking at the power bars for the major indices, the Dow is even at 5 bullish and very bullish stocks, 5 bearish and very bearish stocks. S&P 500 with a nearly 1% advance yesterday ticks this in favor of the bulls, 85-76. NASDAQ nearly 3-1 bullish to bearish breadth here based on the power bars and the power gauge rating, and a little over 2-1 for small caps, which have been underperforming of late. They've had a monster move relative to the S&P 500 since late February, consolidating that advance on a relative basis. We're going to keep an eye on that. It's one of our big themes for the year. It's worked out so far. Let's keep an eye on it. Technology up over 1.5%. Look at the power bars for technology. 24 bullish or very bullish stocks to 3 bearish or very bearish stocks. Roll all this up. Small cap stocks and large cap stocks are bullish. Major indexes are mixed. Here's your choppy trade. Let's see if bank earnings can push us through that 2,800 level today. Stock of the day for PowerFeed subscribers, CVS Health Corp, coming to us from the strong food, drug, retail, wholesale industry group, closed at $67.99, up over 1% yesterday. Ticker symbol CVS. Has a very bullish power gauge rating due to very attractive financial metrics, very strong earnings performance, and strong price volume activity. Also seeing some positive expert activity. So let's walk through the process. The ribbon at the bottom of the screen tells us where the power bar has been, the power gauge has been rather, for the past 12 months. You can see it's been mostly neutral, some bouts of positive in here, but they've been fits and starts. And this really speaks to the importance of the market and the model being in gear with each other. CVS has been a neutral or a bullish stock for most of the past 12 months, but it's, kind of been in a downtrend, right? Trying to form a base here, but look at where relative strength to against the SPY has been. It's been mostly bearish. Mark Chaikin will tell you that relative strength acts alone as a bullish or bearish indicator, and there's no greater example of that than this stock right here, right now. So, I want to see the stock outperform relative to the SPY before I get really excited here. I mean, it's a very bullish stock with a strong trend in a strong industry. It is oversold with bullish money flow, but this box right here is so important. It's not checked yet. I'm adding CVS to a bullish watch list, not pulling the trigger at this time. Sector tracker, movement of the major sectors over the past 5 days. We like what we see at the top of the list. To me, this is risk-taking. Tech, healthcare, discretionary. These are the sectors where investors go looking for alpha. The fact that they're outperforming over the past 5 days is encouraging to me. Financials having a little bit of a run here. Mark Chaikin, in his note on Sunday, highlighted financials as potentially finding a bottom, and he highlighted some good ideas coming out of the XLF, up 2.11% over the past 5 days. Good call there. Real estate and utilities, the defensive groups at the bottom of the list. Remember what I said. I like the idea of utilities forming a relative bottom, but I did say it's going to take some time. That's real estate, rather. Apologies, real estate. Utilities, I like fading. I like fading the strength there, and that's been a good call this week. Energy, middle of the pack. Materials and industrials seeing some counter-trend rebounds as trade rhetoric winds down here. And this is important to remember. We're getting into earnings season now. We're going to shift from the macro to the micro, right? Trade headlines are going to be less likely to dominate investor activity now that companies are reporting earnings. We're going to hear from earnings. I mean, Jamie Dimon this morning told us in his press release that the economy is strong. Let's take a look at what that means potentially for retail services. 19 bullish or very bullish stocks, 12 bearish or very bearish stocks. This subsector has outperformed the S&P 500 by a little over 3% over the past 6 months. And the power bar ratio, which is a measure of future potential, is strong. Stocks currently ranked in the top half of the 21 subsectors that we look at, number 9 of 21. It has ticked down 2 slots over the past week. And some of the indicative names here are Liberty Expedia, Signet, and Liberty TripAdvisor. Let's take a look at Signet here today. Signet is a name that I like to look at because I happen to know from my previous role on the institutional sales desk that this is a hated name in the investor community, and that's what makes it interesting to me here because it has a very bullish power gauge rating. Remember, the power gauge rating is based on a 20-factor model. It is quantitative. It takes the emotions and the biases out of the investment decisions. There are a lot of investors that I know hate this stock, and those emotions are going to hurt them. And you can see here, this stock appears to be making the turn. The ribbon at the bottom of the screen tells us that the power gauge is very bullish, and the stock is outperforming relative to the SPY. After intense underperformance, we're now seeing intense outperformance. Overbought, oversold indicator closer to overbought than it is to oversold. So we want to wait here. Do have support at $55. So maybe some sideways action between 55 and 60. Sets up this indicator, the overbought, oversold indicator maybe gets down to an oversold level, and you can pull the trigger for an entry on the long side. Take the emotion out of it. Take the bias out of it. This is a hated stock on the street. I think there's a good opportunity here. We're going to add this to a bullish watch list. Trending names, yesterday's S&P 500 movers and shakers. Computer Associates up over 18% as it agrees to be bought by Avago, which was down over 13%. Recall last Friday on this show, our industry in focus was software, and I pointed out Computer Associates as one of the names to focus on, as it had a very bullish rating and it had tripped one of our buy signals. On the day, I wanted to highlight, I highlighted Computer Associates in addition to a couple other names. Nice trade there for those who took it. ISRG and Align coming to us from another group that we've highlighted here. MedTech and devices, both up over 4% yesterday. IPGP, a bearish name that's up over 4% after being up over 4% the previous day. We're going to take a look and see what's going on there in my work today. Autodesk, neutral rated stock, up nearly 4%. On the sell side, as we said, Avago getting hit there. Investors not liking the fact that they're buying Computer Associates. L Brands. Love to see a very bearish stock down double-digit percentages. That's the model at work. Look at Helmerich and Payne here. E&P. This is a services company in oil. Remember a couple of weeks ago we were talking about oil. I said I liked E&P. I didn't like services. Here's an indicative name there with a very bearish rating, down over nearly 2.5% yesterday. So as I said, banks kick off earnings season. And here's the KBE, the SPDR S&P Bank ETF. And I highlight this in my note today in a lot more detail for Chaikin Analytics members. You can see here a steady uptrend over the course of the past 2 years, and now we've hit this kind of consolidation zone and basically been going sideways for most of 2018. I think key support is at $46. I think resistance is at $51. You can see it here on the chart. We are above a rising 200-day moving average, so that is encouraging. RSI is neutral. I don't like the series of lower highs here, but as long as we're above $46, I'm going to defer to price. Chaikin money flow is bearish, but you can see here it's swung between bullish and bearish throughout the past 2 years, even as the fund was moving up. So we're going to see. Let's watch the big bank earnings today. As I said, JP Morgan, Citi, PNC, and Wells Fargo all reporting today. Let's see how they report. A break of 46 would be bearish. A break of 51 to the upside obviously would be bullish. Let's see if bank earnings can move this fund one way or the other. FANG breaks to new highs. This is an indicator that I built, or an index rather. It's basically an equally weighted index of Facebook, Amazon, Apple, Netflix, and Google. These are, the market generals. These have been, strong big cap leadership across, in two of the leading parts of the market, technology and consumer discretionary. So if this index is moving to new highs, I think that that's a bullish data point. It's only one data point, but it is a bullish data point for the market in general. And what's interesting here is at no point in the past 2 years, or year rather, has this indicator become oversold. This is a strong uptrend for these stocks, and you can see we worked off an overbought condition here, and now we're moving higher again. That's the RSI. As the group breaks out, I would actually like to see this indicator become overbought. 200-day moving average solidly rising. FANG stocks, market generals breaking to new highs. Some might say that points to narrow leadership. We'll take, I think it's one data point. It's a solid one, but we have to watch other data points as we go through our investment process. One of those other data points, on Fridays for Chaikin Analytics members in my notes, I highlight key themes and relationships, and this is one that I watch closely. You've heard me talk about it numerous times. This is the Van Eck Vectors Semiconductor ETF, ticker SMH, relative to the S&P 500 ETF, SPY. And you can see here, I'm not a pattern guy, but I guess if this breaks, you would call it a head and shoulders top. Semiconductors are about 90% correlated to the S&P 500. And this relationship in particular, the relative relationship and the relative performance of semis to the market is over 95% correlated to the S&P 500. If this relationship breaks down, that would have bearish implications for the market overall, in my opinion. It has not broken down yet. So far, we've tested and held this support level. We're near it now. We are below the 200-day moving average of the ratio. I do not like that. I don't like the series of lower highs on the RSI, but we are in fact closer to oversold than we are to overbought. So we're going to watch how things play out here. We'll see what the semiconductor stocks have to say as we go through earnings season. Keep an eye on this ratio, though. It is important for the market in general. As we always do, we'll round it out with a look at the sectors. Technology, healthcare, utilities, and real estate all have bullish power bar ratios, i.e. more bullish and very bullish stocks relative to bearish and very bearish stocks based on the power gauge. And industrials and materials remain the bottom two performers. Energy down there, consumer staples down there. Not much has changed really in this list this week. We are encouraged to see tech and healthcare at the top of the list, though. That is a sign of risk taking in the marketplace. So you can get powerful, profitable stock ideas and more every day as a PowerFeed subscriber. www.chaikinanalytics.com/PowerFeed TV. I want a special thanks to StockCharts.com and StockCharts TV for hosting this show every day. And just a quick housekeeping item, I will be out Monday, Tuesday, Wednesday, and Thursday of next week. One of my colleagues, Nick Webb, will be hosting the show. Happy Friday the 13th, everyone. Have a great day. Have a great weekend. See you next week.